Strong rebound by Indian equities today. Markets regained most of last week's losses as global cues turned positive. Nifty hovered around the 25,700 mark. Broader markets moved in line with the blue chips. Overall market breadth remained neutral. In a surprise move, Britannia parts ways with MD and CEO Varun Berry, waiving his notice period despite his offer to serve it out. Incoming CEO Rakshit Hargave will also take over as MD upon joining in December. The abrupt leadership shuffle spooks the street. Worsening in the asset quality of Bajaj Finance's MSME loan book has prompted the lender to rein in growth, leading to a cut in its FY26 growth guidance. The shadow bank also said credit costs will likely be near the upper end of its guided range. The stock slipped in response. Sajjan Jindal led JSW Steel to sell up to 50% stake in Bhushan Power Steel. Japan's JFE Steel is the frontrunner. That's an exclusive. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Rima Tendulkar. Rima, turned out to be a great session for the markets. We did manage to see that intraday recovery. We managed to sustain those gains. So good going.
What a turnaround, right? Midday, the Nifty was down around 25,450. And finally, when we close, we are almost at 25,694. 120 points up for the day. From the day's low, it's about a 250-point recovery. And you've got to hand it over to some of the big winners of the day. So to just run you through them, IndusInd Bank did well. Defense stocks were higher. In fact, the Nifty Defense Index was the best performing sectoral index. BEL was up. M&M, Adani Ports, Eternal saw gains. HCL Tech continues with the rally. In fact, HCL Tech is up 2% today. Yesterday also it was up nearly about 2%. Shriram Finance reacting to numbers and that stock did well. On the way down, it's Bajaj Finance, Finso weak in trade and ONGC too reacting adversely to the numbers. We'll talk about all that and more. Let's quickly tell you what we have for you on our show today. We start with the top movers and shakers with Vivek. Britannia's management shake-up has caught the street off guard. Bajaj Finance under pressure as the asset quality worsened. JSW Steel may offload around 50% stake in Bhushan Power and Steel. And then the key market events to watch out for tomorrow. But first up, as always, let's get a handle on the big movers of the day with Vivek.
Well, thank you so much for that. Again, a session where you actually saw, especially in the later half of the session, where advances far outpaced the declines. Now, some of the gainers largely stocks that moved on the back of strong results. Vikran Engineering, a recent listing, very strong margin expansion as far as Q2 is concerned, ended high by almost 4%. Syrma LGS, one of the biggest outperformers as far as the EMS space was concerned. Also, a couple of acquisitions announced. The street clearly like that, again, high by over 3.5%. Idea, clearly one of the stocks of the day, especially as far as the mid-cap space was concerned, 8% higher. Losses narrowed, ARPU improved. Under the back of that, street cheered by taking this particular stock to double digits. HEG as well as HPF Graphite, both of these stocks post results did very well. The management of HEG said that demand is quite strong, capacity utilization levels are quite high. And also Bharat Forge, despite the fact that the management said that H2 could be slightly muted as far as the North America Class 8 truck orders are concerned, they said that the India industrial as well as defense space is something that's doing quite well, high by over 5.5% for Bharat Forge. On the other hand, quite a few laggards, you can't look past Bajaj Finance growth guidance was something that was trimmed over 7% lower. Hoodco, despite a good set of numbers as far as Q2 was concerned, this particular stock saw quite a bit of a sell-off today. MapMy India, FY26 growth guidance at close to 20 to 25%. Street didn't like that, almost 4.5% lower. And Trill, transformers and rectifiers, yesterday hit the lower circuit. Today, another session where the stock hit the lower circuit. Street didn't like the weak Q2 and also the fact that the company is facing problems as far as World Bank is concerned.
Thank you very much for that. Let's get in our guests, Jay Bala and Sudeep Bandopadhyay of IndiTrade Capital on the show now. Gentlemen, afternoon. Jay, since we're continuing the conversation from closing bell, I'll come to you when we talk about stocks. But Sudeep, one stock, if you had to pick from the big earnings that we had over the last 24, 48 hours, which one stands out for an investment?
Well, I think, I may sound biased, but I do like Bharat Forge. I think, we were all waiting for them to talk about the defense business, and they did talk about the defense space and the Indian industrials. And this is where the future growth is going to come for this company. And, that's exactly what they talked about. While the US business probably will be in a little bit of a slow kind of a pace, but the India business is growing, and that has a potential to grow significantly from current level as well. And we are keenly watching that space. So the commentary from Bharat Forge was a music to the ears for the investors there. And that's pretty much the reason why the stock did go up today.
Okay, all right. So that's on Bharat Forge. But let's get to the big corporate story today. Shares of Britannia declined in trade following the CEO and MD Varun Berry's surprise exit. Incoming CEO Rakshit Hargave will also take on the role of MD when he joins the FMCG major next month. Manglam is here with more details on this story. Manglam, big leadership shakeup.
Well, what has spooked Britannia today more than anything else is that the board did not give any notice period to Varun Berry. So Varun Berry has been the MD CEO of Britannia for over a decade right now, and an exemplary leader out there as well. Under his tenure, the revenues grew by about 2.5 times, the profits grew by 6 times, the market cap of Britannia itself was up 18 times. Yes, the street was hoping for a transition. They were hoping for a smooth transition. So on its part, the company had announced Rakshit Hargave as the CEO with effect from December 15th, with the understanding that maybe Varun Berry, when he leaves as the MD, Rakshit will be appointed as MD and CEO. Varun, in his resignation, did say that he was willing to, extend his transition or extend his services for a smooth transition in the notice period as well. But the board has accepted that resignation with immediate effect and waived off notice. What this has done is left a hole in the company's top for the next 1 month. No MD right now, but Natarajan Venkatraman, who's a CFO, has been appointed as the interim CEO. So this transition jerk is something that the street is not liking, and which is why the stock is lower by about 4%. Although from a business standpoint, the next half of this year looks fairly strong for Britannia, with the GST-related benefits coming up and showing in their volumes.
Bajaj Finance also on the radar today, and that too under pressure after the lender trimmed the FY26 growth guidance as the quality weakened, particularly for MSME. Gaurav is now joining in to fill us in with the numbers and what led to the 7.5% fall in the stock price.
Well, as when we look at Bajaj Finance, the number looked fine. In fact, numbers came in line with the street's expectation. When we look at profit, that increased almost by 24% on a year-on-year basis. And in fact, PPOP and net interest income, that also increased somewhere in the range of 22 to 23%. In fact, when we look at net interest margins, they remain flat. Credit costs, that remain stable on a sequential basis. But what went wrong is the commentary from the management. Now, Bajaj Finance is one of the stocks which is seen as a proxy for consumption play. And specifically, given that there are multiple tailwinds like rate cuts and GST cuts, Street was expecting AUM growth to sustain. But now management actually trimmed the AUM growth guidance from 24 to 25% to 22 to 23%. Now, they are attributing this cut in guidance specifically to mortgage and SME segment. In fact, for SME segment, they are expecting growth to remain somewhere in the range of 10 to 12%. Second factor is that credit cost guidance that they had given of around 1.85 to 1.95% in the beginning of the year. Now they believe that the credit cost for entire FY26 will remain at a higher end of the guidance. Given that they are also seeing some kind of stress specifically from the MSME, and they also said that they have trimmed down almost 25% of the unsecured MSME exposure. So it seems that they are seeing some kind of stress in the MSME segment, and at the same time, they're also seeing some struggle in the growth in terms of MSME. Now, given that the valuations are also high for Bajaj Finance, it seems that the market did not take it in a good way. And as a result, when we look at the stock performance, it was down more than 7% today.
Okay, all right. Well, Sudeep, this is one set of stocks which were in focus today, the Bajaj twins. What's your sense in terms of the results reported by both of them, and would you be a buyer of these counters?
Well, I won't be a buyer. I think look at a kind of valuation at which Bajaj Finance and even Bajaj Finserv is quoting, the margin of error is non-existent. And, the moment there is a bit of a weakness in anything, I think the market is punishing them. Of course, the growth guidance coming down was one setback. And the asset quality related issues on the MSME front, which they have talked about, I think did spook the market. Remember that, it's quoting as between 5 to 7 time book, whichever year you consider. whereas State Bank of India does trade at a 1.1 time book. Now, when the things are a bit challenging on the MSME front, which is where NBFCs get a lot of exposures from, it's probably better to move to larger lending entities like a bank, where the MSME exposure is significantly lower. And when it's quoting at a much, much lower valuation, why not look at that? I think that's pretty much the logic which Bajaj Finance is facing today. And that's why we did see the sell-off.
Jay, Bajaj Finance 7% down today, but it's still up more than 40% on a year-to-date basis. What's the stock price telling you?
See, both Bajaj Finance and Bajaj Finance are in the late stages of their long-term rally. In the short term, the rally seen from July to November, that's possibly coming to an end. But in the medium and long term, it's still got higher highs to come through. But got to be very conscious that, it's probably got a few months of uptrend once the support comes in about 975, 935 for Bajaj Finance. And I haven't looked at Bajaj Finance or the exact support levels, but yeah, even a similar structure for that. But it's still got higher highs to come through with a short-term short-term downsides to work with the levels I've mentioned.
Okay, all right. Well, now let's get to a CNBC TV 18 exclusive. Sources say that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Japanese steel giant JFE Steel is expected to pick up the stake. Yash is here with details on what he's picking up from his sources. Yash.
Well, very interesting transaction as far as the M&A space for JSW Steel is concerned. What we've been given to understand from our sources is that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Now, this asset, that is Bhushan Power and Steel, is the same asset which JSW acquired first under NCLT, under the Insolvency and Bankruptcy Code. That decision was then overturned by the Supreme Court, which going ahead was again, overturned in favor of JSW Steel, where JSW Steel was allowed to acquire this asset for the revival of the asset. What we've been given to understand from our sources is that Japan's JFE Steel is the front runner when it comes to picking up this 50% stake from JSW in Bhushan Power and Steel. We've written to JSW Steel also on this particular query. The company, in response to our query, has said that JSW Steel's strategy includes evaluating various opportunities, both organic and inorganic in India and overseas, including potential collaborations aimed at enhancing scale, efficiency and global competitiveness. However, the company would not like to comment on speculation.
Thank you very much for that. Sudeep, JSW Steel, does it make sense to monetize this asset? Should they have kept it in their fold to wait and see how the cycle plays out? What is your own sense? We have to wait for the deal to happen, but this is what we picked up from our sources.
No, as a strategy, Rima, I think it's a good strategy. They needed to monetize because the group has been expanding in multiple areas, and there is, liquidity requirements from a group perspective as well. So it does make sense for them to monetize, and getting an international player with a track record and credibility definitely adds to the overall, JSW Steel reputation. So I think it's a good step. Now let's see what valuation and what kind of deal they get.
Okay, all right. Jay, would you have a call on the stock, on the technicals?
Yeah, on the metal sector is one of the strongest, and JSW was the leader there. I've been putting out in my notes to CNBC for quite some time now. But it's getting quite late in the rally, and it's still bullish. I'm bullish on the metal sector, but you might want to look at other stocks. I've been bullish on Sandur Manganese and Hindustan Copper and many other names. So you might want to look at other names here rather than JSW Steel. So it's not the best bet at current levels. Maybe you can look at metal sector as a investing opportunity.
Metals has had such a good run, 22% up for the metal index year to date. In that, JSW Steel was up about 33%, and Hindustan Copper reacting to numbers and stock surged 7.5%. But it's been a very, very busy day for Midcap earnings stock. Bharat Forge, for instance, gained up close to about 6% after reporting a healthy set of numbers. Sirma SGS perked up. Rate gain, though, delivered a mixed bag. Sudarshan joins in with a report card.
So first about Bharat Forge, earnings were better than expectations on both consolidated and standalone basis. So two numbers. In consolidated basis, company has reported EBITDA of rupees 730 crore. Our expectation was around rupees 600 crore. Margin too has come in higher than 18% against our expectation of 16.2 to 16.3%. On standalone basis, also company has reported margin of more than 28%, while our expectation was around 26%. But what has led the stock to move sharply higher was the commentary. So first, company has talked about that North America business, that is exposed to North America business, will remain weak in S2 FY26 as well, after the stock had seen a sharp fall. But following that, company is saying that India industrial business and the ramp up in defense business that company has been undertaking will more than offset the weakness that company will see in the North American exports business. That led to a sharp gain in the stock, and at the close it was up almost 6%. Talking about rate gain, at one point the stock was down almost 6%, but it has seen a sharp recovery as the commentary came in. Revenue was up 8.8% sequentially. Margin has come in at 18.2%, higher than the guided range of company, that is of 15 to 17%. Also, company is saying that it's aspiring to double-digit organic revenue growth by FY27 and beyond. That led to a sharp recovery in the stock. At the end, it was down 2%. Last one is Sirma SGS. Earnings were very strong. Revenue has increased by 38%. EBITDA has seen an expansion of 62%, and margin has moved to 10% from the level of 8.5%. Also, company has maintained the guidance on revenue front of 30% growth for FY26, and it has raised margin guidance from 9% to 9.4 to 9.6%. And also for FY27, company is saying that growth is expected to be more than FY26, and that has led to a sharp increase in the stock price. Also, at the close, it was up almost 3%.
Okay, all right. Thanks very much, Sudarshan, for that. So a lot of stocks in focus. Sudeep, anything that you like from the broader markets in terms of any mid-cap earnings that have stood out to you?
Well, I think Sirma earnings were pretty good, and I do like the Sirma earnings. This is one space which we have been monitoring. Of course, the valuations are not cheap, so one has to take a long-term view when they're entering this. The other company today, which I did like the commentary, is RateGain. I have been, recommending RateGain for quite some time. In between, I think they were a little wobbly and things were not looking too good. But the management commentary today was very strong, and I do like that. I think this is one segment, travel and tourism, which is what they cater to, which is growing rapidly world over. And the scope for this company is humongous. They also have been taking a strategy of acquisitions through which they have been growing, but organic growth is also supporting, and that's what the management commentary talked about. And I think it's very, very encouraging. The market initially didn't like, but then subsequently it recovered quite a bit.
Indeed, and the acquisition that they did has been completed in November, so it will start showing up in the financials in Q3 onwards. Jay, you want to leave us with some trading ideas for tomorrow, the coming week, the coming month?
Yeah, I think you might want to look at Aurobindo Pharma. It's actually breaking out of a trend line that started from the high of 2025, and that's probably signaling this prospect for Aurobindo Pharma to hit somewhere about 1,500. Stop loss about 1,065. And the IT sector also is starting to perk up, and you might want to look at Coforge. Coforge with a stop loss of 1711 for a short-term objective of 2025.
Okay, all right, Jay, as well as Sudeep. Well, on that note, we're going to let you go. Thanks very much for joining in and giving us all of that perspective. On that note, it's time for a short break. We'll get you the top corporate voices along with key market events to watch out for on the other side. Stay tuned.
Welcome back. SIP inflows have hit a record high in the month of October, according to data from the Association of Mutual Funds, AMFI. SIP inflows have been steadily rising since July due to steady retail participation and now very close to that 30,000 crore mark. However, equity fund inflows on a net basis have eased by 19% on a month-on-month basis. So from 30,000 crore, it's come down to 24,500 crore. Hybrid funds continue to attract interest, and gold ETFs are also attracting investors despite the record high prices seen on the yellow metal.
All right, well, the top corporate voices from the day, PhysicsWallah's co-founder Pratik Maheshwari told CNBC TV 18 that the firm is the fastest in its segment to cross 3,000 crores in revenue. He added that the company's online reach is still only about 7%, leaving plenty of room for growth. Maheshwari also highlighted that profitability is in sight, with cash from operations rising over 2 times.
CEO of Aether Energy, Tarun Mehta, told CNBC TV 18 that the rare earth magnet shortage impacted the company's second quarter revenues by 19 crore and a little about 4-5 crore more at the EBITDA level. But he assured that the issue is now behind them. The non-vehicle revenue, the software revenue, is expected to grow faster and grow from the current 12% of their revenues. He added that a new low-cost scooter platform will start contributing from next year, and providing a timeline for EBITDA break-even remains difficult.
And KPIT Technologies management told CNBC TV 18 that the company has secured a multi-year deal worth $100 million this quarter. The company reported a 2.3% decline in organic constant currency revenue, decline of 2.3% sequentially, but expects meaningful growth in the fourth quarter.
So Q2 was negative, Q3 will be flattish, and Q4 will see meaningful growth. That's the word coming in from KPIT. But before we wrap, we'll bring you some of the key market events to watch out for tomorrow. Gaurav is standing by. Gaurav.
Well, yes, as we head tomorrow, we have got earnings. First, let's talk about Tata Steel, Asian Paints, Ashok Leyland, HL. All of these companies will come up with the earnings. And along with that, we have got companies like Honasa Consumers, Nazara Tech, Sansera Engineering, IGL. These companies will come up with the earnings. From the gold market, we will see Senco Gold and PN Gadgil. Now, these companies will also release their second quarter's earnings, so we will closely watch out on that. But apart from that, we have CPI data which will be coming in. Now, why this is important is that we have already seen inflation print below 2%. So this data is going to be a crucial point, given that there is already a speculation that there may be another rate cut in December. Apart from that, finance minister's meeting will happen, and this will be a pre-budget meeting. So that is also something that we should be watching out for tomorrow. We will see 2 new companies getting added in the market. First is Tata Motors CV, and second is the newly listing company of Grow. Remember, Grow actually came up with the IPO to raise more than 6,000 crores and got subscribed more than 17 times. We also have RBL's EGM, which is Extraordinary General Meeting, happening tomorrow, where they will be discussing and getting a nod from shareholders for the Emirates NBD deal. Remember, Emirates NBD is going to invest more than 26,000 crores in the bank for 60% stake. Apart from that, we also have new IPO which will be coming up, which is Tenneco Clean Air. They will be launching their IPO to raise more than 3,600 crores. From IPO to other market, when we look at Vedanta, that is also one thing to watch out for, because tomorrow is the date when NCLT will rehear the case of Vedanta demerger. And lastly, from the global markets, we will be watching out on OPEC monthly meeting report that we will be getting, and let's see if anything material comes out from that report.
Okay, all right, Gaurav, thanks very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.